I'm Sherry Chan. I'm the Chief Strategy Officer of Atidot, and I can tell you a little bit more about the company in a little bit. Even though I'm not serving in an actuarial role, I am a very proud actuary. I just finished up my term on the American Academy of Actuaries board and started my board term on the Society of Actuaries just last week. So I've been an actuary for 20 plus years and served in chief actuary roles for the state of Ohio as well as for the city of New York, and now I'm in InsurTech. To my right is Nick Volpe. Nick is the chief technology officer at American Equity since last August. Prior to that, he was at Guardian Life, serving in roles such as the Chief Information Officer of the Individual Markets and Head of Enterprise Customer Technology. Quite a mouthful there. And prior to that, he was also the Senior Information Officer at AXA Equitable. Nick has a Bachelor's of Science, bachelor's degree in Business Administration and Management from Boston University. Dror hopefully will be joining us soon. Dror is the CEO and one of the founders of Atidot. Atidot is a InsurTech startup that provides AI insights to help life insurance companies tap into their business, their book of business, by engaging in policyholders for the benefit of the insurance company, the producer, as well as the customer and the consumers. Dror, prior to starting Atidot in 2016 from Tel Aviv, he was serving in the army and was part of the Israeli intelligence unit. He served there for 11 years. And he has a Bachelor of Science in Math and Physics from Hebrew University, as well as a Master of Science in Information Technology from the same university. So we're going to get started. So Nick, I wanted to, with this panel about AI here, do you want to speak about Gen AI versus AI, or do you want to delve into kind of the climate of the industry right now?
I think, so the plan was, just so everyone knows why we're thrown off here, Dror is supposed to open up with like Gen AI and all the stuff about data, and I was supposed to talk about insurance industry use cases. So I'm going to stick with what I was supposed to talk about, because we're not really diving deep into the Gen AI space just yet in the insurance space. But we are digging deep into data and AI at some level. A lot of the use cases we're using are for finding our customers, understanding our customers, propensity to lapse models. From a life insurance perspective, anyone who's working in that area, there's a lot of focus on underwriting, automating underwriting, using alternative data sets. We did that a lot at Guardian, trying to get rid of our enormous underwriting costs and time to market for products. Here at American Equity, being in the annuity and the FIA space and having two distribution channels, an IMO distribution channel and then a third-party distribution channel, we're trying to work as closely with our end policyholders, but more importantly with our distribution channels. Finding the best products to put in front of people, doing product design. So really what we're looking at is taking the data we know about, hey Dror, how are you? Taking the data that we know about our customers from policyholder, policy entities that we've collected, but also augmenting in other data and actually putting that through data science to understand what the next best action might be, propensity to lapse models, reach outs to our customers, reach outs to our policyholders, but also more importantly, find those agents that are doing huge business in maybe financial planning space that would be ripe for annuity sales. Annuity sales are super hot right now. I think the industry's up 30%. We are rounding out a 70% growth within our FIA space at American Equity. So more financial planners need to talk about it. So using data to find the people that aren't talking about annuity, haven't been talking about annuities for the last 10, 20 years of their career is extremely important to us. And that's kind of how we're looking at some of the use cases within the insurance space of annuities and life insurance.
Thank you, Nick, and welcome, Dror. We did the intro already, so glad to have you join us. I'm going to roll two of the questions into one. So we, obviously are talking about AI here, and there's a lot of talk right now about, AI has been out, obviously, but in the last year or so, Gen AI, and specifically ChatGPT, has taken on, a life of its own in many conversations around the country, around the world. So, I'm going to first ask you to talk a little bit about, the difference between AI and now this emergent Gen AI. And then after that, building off of what Nick was talking about, he talked a little bit about AI in the space right now that we're in. But, could you tell us a little bit about use cases and specifically how are we seeing the applications in the industry?
So first of all, good afternoon, and thanks for the opportunity to present today, and thank you for coming. If I'll take a little bit of a step back, I think AI and data has been around for years. There are studies since the 1950s, so it's not a new topic, and we've all heard about data and AI in ITC in many years in the past as well. But I think some things did change in the last couple of years that made it more of a kind of headline news and why everybody's talking about this even more. And I think what happened is in the last couple of years, a lot of the skills that you would expect machines to do got to the point where they're on par or better than what a human would do. So kind of understanding text and understanding images and so on and so forth, and we've all find ourselves playing with ChatGPT or Midjourney or DALL-E or any of these other tools that make it a little bit more human-like. So we feel like we understand this AI better than this being this black box of mathematics like it used to be for many years. And that, I think, made it a little bit more of top of mind for many of the boards and many of the management teams to say, okay, so this is now a thing that we need to be aware of, and it might change how we think about the world. So let's think about how it changes the business. And we see, if you look at the Gartner reports, Celent reports, and things like that, you'll see that companies are kind of trying to move from having, limited AI in production to having tons of AI in production by the end of the year. And that's not really what we see in the market. We see that the companies are more interested in AI, but it's not necessarily that they go and implement more AI than they should have, because now it gets to the question of what does this AI do for us and how does it help the business in a way that is meaningful. So we'll talk in a second more about use cases, but I think a few things to consider from that perspective. First, we're in an industry that deals a lot with numbers and not just text. And all of these kind of new tools are not necessarily numbers generated. They are generating text and images, which is great for marketing stuff and some of this other collateral, not necessarily as valuable for everything that is numerical, such as understanding the policyholder, specifically in life and annuity, where there's a lot to understand and unpack from a financial perspective and understanding the numbers and the calculations and so on and so forth. That's one thing. The second thing is all the kind of very boring, behind the scenes, traditional privacy, security, data, where it sits, what it does, et cetera, et cetera. I spoke with Nick earlier today, and Nick said, he doesn't have ChatGPT on his phone because of privacy concern and security concerns and how it's being used and so on and so forth. So we can talk a little bit more about that too. But I think if you want the machine to learn from your data, you need to upload your data somewhere. And now let's think where this somewhere is. And now you start seeing this move from, hey, this is a generic platform, to maybe there is going to be platforms that are industry specific that allow you to have all the bells and whistles of the privacy, security, understanding of the domain, life and annuity, and so on and so forth.
So I wanted to, and this is not part of the prepared questions, and I'm going to put them on the spot here because we have a little time. But I think with both your backgrounds, you'll probably be able to answer this with ease. And so, given that this session is about AI, right, and we're talking about the current climate and the current use cases and all that, where do you see the direction of AI in terms of what would you like AI to, if we're talking about a 3.0 version of AI, right, and how do we instill that into our industry? What are some of the things that you would want to see?
So I think Dror hit on a couple of good things there. So from one aspect, Gen AI, we're actually dabbling with it very fundamentally, rudimentarily in our development capabilities. So we're actually looking for some of our cycle batches, running that, looking through reverse engineering code from old COBOL. For those of you in the insurance industry, you know how much old COBOL sits out there. So looking at it from a pure technical perspective, so that's one of the use cases that are less business driving, but definitely could potentially create scale. And leverage our actual developers for more of the creative forward innovative thinking for our next generation of technology. So I'd like to see it take a role there, because we're all sitting here with 60, 70-year-old platforms that you could get something out of that from a Gen AI perspective. From a front-facing to the clients, I think there's a lot of potential, as Dror said, for ingesting the data that we know and understanding our clients, and then creating an automated journey. I think we spend too much time worrying about our space and how it is very much a people conversation. And I think the next generation of agent and the next generation of policyholder will come to expect some sort of digital journey or digital interaction. And it's not just, like I said, not the policyholders, it's also the agents. I think we spend too much time worrying about, well, you can't have an AI send out something to a client about a next best action. These products are too complex. I think that's becoming untrue. I think people are becoming more familiar with it as it becomes part of an asset plan or as part of an investment strategy. So I'd like to see us push more toward direct connection between the carrier, either via the agent, right, white labeling stuff for the agent, because I don't believe agents are going anywhere. But I'd love to partner more with more agents and say, hey, we're going to generate the journey for you. We'll white label it with you, and we'll send it from your mailbox. But we want to make sure that we're owning that conversation with our policyholders and really driving the conversation with them. And then also, even for the agents themselves, we don't use a lot of AI for product design. We usually tend to chase each other. So if someone raises their rates or does something different in their core, we follow, right? We all follow the leader in the annuity space and even in the life space. I'd like to start using some data-driven AI to help us with product design. Why do these products need to be so complex? Can we simplify them in a way that still generate the value for our policyholders that they do today, guaranteed income for life, or all of the good stuff that comes with an annuity policy? But how do we use data to drive potentially a more innovative or a simpler annuity product or permanent life insurance product? Like term is simple enough. I think the gentleman before us talked about you can sell term online, pretty easy. But permanent life insurance with underlying investable assets, that's the kind of space I'd like to see where we get some product innovation from AI. Most people talk about it from an automation perspective, service center, scale, routing calls. Sure, that's part of it. But I think there's deeper uses of AI that we should be looking to use within our space.
Yeah, I completely agree. And I think one of the things that the AI can help us do is, we kind of more historically in the business, the approach to everything was like, let's think about everything in big buckets. So there is, first of all, from a carrier perspective, the view is always a product view. Is this a term product or a whole life product or an annuity product or so on and so forth? And not necessarily from a policyholder view, because the policyholder view makes it way more complex because they own a few of these products and they have a more complex journey with you as a customer, with you as a company. And this was kind of the agent territory. But in today's economy where there is turnover in the agency business, and customers have different service expectation, being able to use this to kind of start building these more complex journeys and understand that this customer have multiple touch points with you, and to be able to serve them with the right thing at the right time becomes more crucial. And for that, you have to use AI because the technology that enables you to kind of unpack all of this complexity. One of the examples that is very straightforward that I really like is that in this economy, you would see two customers not paying premium. And one would not be paying premium because they can't afford it. And the other one would not pay the premium because you sold them on a 2% guarantee, and today you can get 5% guarantee anywhere. And those two customers, if you treat them equally, they're both not going to last. But you need to be able to say, hey, this customer sits on this bucket, they might need a premium mode change, and let's talk about how we make that journey very simple, because today it's not. And this customer maybe needs an upsell or a cross-sell, maybe need to convert to a different policy, and let's make that journey very simple, because that journey is also not very simple today. And if both of them is something that we can loop the agent into this equation and make sure that the agent either get paid so they're not intimidated by this, or even take an active role because they get the insight and get the customer in the room and they can help them make the pitch, then it's a much more valuable discussion for the customer that drives better performance for the customer and better experience for the customer with the agent and with the company.
So I do want to allow some time for audience Q&A here. If there are any questions, please raise your hand. I can pause a little bit right now, but if you guys need a little bit more time to think about it, I can move on to another question. If there is anybody, again, please just stand up, wave your hands, and bring it to our attention. And while you guys might be thinking about another question, I want to talk about, why is this time a ripe time for the introduction of AI in our space, right? From the last speaker, we talked about, the pandemic changes that's driven a lot of automation, necessary automation, and, replacing some of the changes in demographics in the industry that folks are working. Nick, you talked about some macroeconomic factors such as, annuities really taking off right now, driven by interest rates. Dror, you touched a little bit about just, customer behavior right now. So why do you think, especially you've been in the IT field for a while, Dror started Atidot in 2016. Why do you think now is the ripe time for this AI to take on?
So I think there's probably three reasons. Number one, we're getting better at mining our own data, right? So if you go back 5 years, most insurance companies didn't have access to the data level at which you need to even begin this journey. So I think our technology and our understanding of our own data and how it's mapped has gotten better. I know it's very fundamental, but I think that's a pretty key part. I think there's absolutely need for cost effectiveness and scale in our industry. Things just take too long. I actually sat in a McKinsey meeting, and it was actually very depressing. I've been in the industry for 23 years working in technology, so this really hurt, to my core. We have spent tens of millions of dollars to create a better new business process. Can anyone guess how many days we've shaved off the new business process and annuities in the last 10 years? 1 day. And I know it's been hundreds of millions of dollars across distributors and carriers, and we got 1 day back in a decade. I mean, that hurt. I've been doing this for... And then on the life insurance side, slightly better, but it's still only 4 days off of 45 in the industry. So all the work we're doing is around the peripheral. We're not using data. We're not just... So I think there's an expectation of our customers, an expectation of our agents, and where we need to get to. And I think that speaks to the scale, right? So getting this done faster, understand, putting products in front of people quicker, that's kind of ripe for the taking at this point in time. And then I think there's also interactions with our agents. The agent population is shrinking. They're aging out, and a lot of people are not going into the agent population, but the amount of people to serve hasn't gone down. There's still the same amount of people that, from a macroeconomic perspective, need the products in which we sell: protection and insurance and income for life. So as you have a shrinking agent population to service those people and a maintaining or growing servicing pool, things like AI and data-driven conversations and some of this automated stuff allows an agent to be kind of what we call a cyborg agent, where they can be in front of their clients on a regular basis without actually having to be in front of their clients on a regular basis like they used to be. So I think those three factors are really putting us in a position that we can start to look at and adopt and get serious about data, the use of data in decisioning, and AI.
I'll add a little bit more to this. I think obviously the COVID impact from this perspective helped companies very much to digitize their processes. We've been doing this for a few years now, and the improvement on the IT side of the carrier from where it was in 2016 to today is night and day. The ability to get access to the data, mine the data, put all the data in one place, major improvement, and that's the basis for all of this. When we started, everybody was saying, we don't have the data, and many of the carriers are still in that situation. It's not like they don't have the data. It's just getting to this data is so hard. But many of the carriers are already at this journey of having the data streamlined and automized and put in one place, so you can start doing this mining and analyzing of this data and come up with these models on top of that. So that's definitely something that makes it more of an opportunity today to go and do these AI projects. I think the other thing, is the economy. It's one of the other things that you hear a lot from McKinsey, but also some of the other consulting groups, is that in-force management for years was let's do some expected versus predicted and look at the charts and see that it's going in the right direction and do nothing about it. And Life was a little bit of an earlier mover into this. Annuity is joining in the last year or so. Both of them are very much behind PNC, and all of this very much behind financial services. So the expectation of servicing the customer over time and having multiple touch points and understanding what to do in those touch points is almost like a new notion for life and annuity, and that creates a lot of opportunities for the first mover advantage. For the first mover, that creates a lot of first mover advantage from that perspective. And I think also the fact that the agents population is aging, the younger agents are less intimidated by technology coming into the game. Like if you speak to the kind of old school agents servicing the old school customers, it's probably done in an old school way. A lot of kitchen table and the country club and so on and so forth. But there is a lot of newer generation that is getting to the point of buying these policies, and they buy it from different agents, and because those agents are also younger, and they're less, and they're more accepting of this kind of new capabilities, and don't mind getting these insights and getting this data and getting this support to help them succeed in the business. In many of those kind of discussions, I keep thinking about myself as someone who's supposed to be a prime candidate to buy life insurance. I have a family, I have a business, I check many of these boxes, but it's still very hard for me to make the decision, despite the fact I'm in the industry and I understand most of the products and I understand the ins and outs of some of the insurance companies. It's still a very hard decision to make because many of these data points are not necessarily available online. It's very hard to compare, it's very hard to quote, it's very hard to, beyond just simple term, it's very hard to analyze the product online. It's, you have to speak to an agent to do almost anything. So I think my generation for sure is going to look for some more of a hybrid relationship. It's also that I don't necessarily want to make the entire journey online, but I want to get to the conversation with the agent way more informed than I am today. And I want the agent to be able to show me way more combinations and simulations and scenarios than what they typically can do without any of these new tools. So I think all of this creates this opportunity because the agents are more accepting, carriers are more accepting, the technology is there, and the economy pushes all of us to create this efficiency and drive growth from the existing block versus throwing more money on marketing and attracting new customers. So all of this kind of creates a lot of pressure towards all in the same direction of how do you grow the existing book, and to do that, how do you get more signal, how do you get more data, how do you get more information to be able to service these customers better?
All right, let me ask you one more question before we turn it to the audience to see if they have any Q&A. Again, referring back to the title, a couple words stick out other than AI, right? There's profit and there's scale. So Dror, I'll pose this question to you first and a variation of it to you, Nick. As a founder of a company, I think, you mentioned about the in-force versus the new business, right? And I think Atidot's bread and butter started in the in-force stage. So from a founder's perspective, why did you want to hone in on this? Because I'm sure it has to do with profits. I'm sure it has to do with scale on the in-force stage. And Nick, a similar question to you, follow up after Dror speaks. Being in the industry for so long, do you see that the potential is on that side of the value chain versus the new business?
First and foremost, because I was naive. I was thinking it's makes so much sense and so obvious that if customers end up buying 9 products from 8 carriers, why don't they buy 9 products from 2 carriers? If the carrier would be in front of them, they'll just buy more from them. So I understand that for that, you have to have the data and understand when you need to have a retention opportunity versus an upsell opportunity and put them on the right journey and this and that. But when we started, it just made so much sense. It was almost baffling to why are not more carriers doing that already. So we learned why, and there is a lot of kind of very good reasons why it's more complicated than it seems, mainly the complexity of the products and the distribution and the relationship and so on and so forth. But I think one of the other things is that in the last few years, the beginning few years of InsurTech were all about how do we build this from scratch and how we go direct to consumer and how we go like the complete utter opposite of the traditional carrier approach. And I think we're now kind of balancing back into a point that is somewhere in between, where some things needs to be automated, some things still needs to be manual, face-to-face, relationship-driven. But in order to do it properly, you talked about a cyborg agent. I think that's where we're probably going to see most of the action in the upcoming years, where it's like, how do you get all of these tools and put it in the hands of the people that can actually do something with it? One of the challenges we kept having first years with carriers, and still is a big challenge for many of the carriers, is you get the insight. I know who is lapsing at a very high probability. What do I do with it? If I can't put it in the hands of the agent, if I can't put it in the hands of the call center, if I can't reach out to the customer directly, then, then what? Then I just got more insight on something I can't do much about. So you talked about how you turn it into a product feature and how you make it a smarter journey with the customer or with the agent or with the contact center to make it more actionable and more relatable. And that's what brings both kind of the scale and profitability, because this is something that if you do at scale, like an agent can own as many customers as they manage, but they still have 80, 90% of their book that they're not engaging with. The commission is paid out, they don't know the people, they lost track, who cares? But if you can make it easy for them, then you create a scalability because they are interested in taking action if there is something in it for them. And we just need to make the right mechanism for them to have something in it to be interested in this and participate in this with you.
So I think it's pretty easy as a carrier why you would focus on in-force. First of all, we have amazing distribution partners that know how to sell. We don't really, I'll use the word need, it's a little strong. We don't need to get in the way of that, right? Whether it be our IMI channel or a third-party distribution channel, they know how to market and sell that initial sale. From a profitable perspective, though, what's most profitable to a carrier? The in-force block. New business is the most expensive thing, and there's almost no profit in new business. What actually is valuable to a carrier, especially in life insurance, but also in annuity, is the in-force block. And most of us, up until 4 or 5 years ago, just hoped that sleeping dogs would lie. Just leave it alone, don't call them, because then you'll remind them what they bought, and then they might actually lapse the policy or take the withdrawal. So we were kind of afraid of it, because we didn't understand it enough. Then we realized that it's important to maintain it, but it's also important to understand signals in your client's life, as Dror said, for the upsell. Most people that bought an annuity earlier on in their life probably have had a trajectory in their career or income or investable assets that have gone up. And to your point, they go to another carrier because some other advisor called them and said, I want to sell you something versus their current advisor. So I just think from a profitability perspective as a carrier, that is our most valuable asset, is the in-force block. We were scared of it for a very long time, didn't know what to say when we got them on the phone. And then the new business, we've got 360,000+ agents out there that are really, really good at selling new business. So we didn't need to focus there. I think we do now, so I say we didn't need to. I think agents are actually asking for more value add than product, which is really cool. They're looking to carriers to do more than just provide a better percent, a better commission. They want more value add. How do you help me grow my business? What other values can you bring to my business? Can you teach me how to create scale? So that's where data's starting to play from an agent distribution perspective. So that's a lot more fun than just rate competition and, oh, we're 5.5, 6. That gets old quick and it becomes unprofitable with the carriers. So I like where the trajectory is going for the distribution channels as well, looking for more value added from the carriers who know a lot about this block of business that they contribute to as well.
I'll add to that I'm originally from Israel. In Israel, it's a, but in Israel, it's a very different insurance ecosystem. In Israel, it's because of the different regulation, because of the different structure, everybody knows how much they're paying for, on the policy from, how much they're paying, like what are the fees, what is the cost of insurance, and what was the returns last year. Everybody knows. And you even get a chart where like you should expect a number between this and that, and you're sitting here. And you come here and nobody knows anything. They rarely know who is the carrier where this policy is being managed. And I think talking about letting dogs lie, I think in Israel, it's not like they buy less, they buy more. But because they know what they're getting, they know what they should expect from this, and then there is an active discussion on how why am I paying so much? Because I'm getting more returns than what I would get with other carriers, and so on and so forth. And in some cases, people are actually paying more because they get better returns. And if you start creating this dynamic, I suspect people would pay more if they understand what they're getting, versus getting re-informed about their policies and lapsing. And I think the other thing that Unique touched slightly on, but I think is also happening in the last few years, is there's a lot of private equity introduction to the market. I think the last stat I saw was that about 180 blocks are owned by private equities. They have a different perspective to how to manage the business than mutual companies. There is publicly traded companies, and there was a change in the accounting regulation that made lapse rate and surrender rate a little bit more important than it used to be. So all of these things now put a lot of spotlight on in-force because the private equities bought it for the assets. And if the assets are living, then there's an issue. And they're planning to take an action, and they're going to be more vocal about this than maybe your typical mutual board that have a longer kind of horizon from this perspective. So I think all of that also creates this pressure on better understanding how to drive profits, how to drive the better economics on this block. That is kind of new to the market.
All right, before we wrap up, are there any audience Q&As?
I've got some online ones. All right, I'm going to combine a couple of these just to make it easy on you. Question number 1, will AI replace agents in the future? And can you license a cyborg agent? Please explain what you're suggesting.
So I'm not in compliance, so I can't explain can it be licensed. I think there's going to be a serious conversation about that, because when you think about driverless cars, the reason why the technology is not where it could be is because the insurance companies haven't figured out who to blame if something happens, right? Because I think that the technology is there to actually have driverless cars on a more large scale. So I can't speak to compliance. Can it be licensed? I think that would take years for state-level regulators to get comfortable with licensing an AI. But even way before that conversation, do I think AI will replace agents? No. I think agents are still a big part of the conversation. We've seen all different technologies try to replace it, whether it be direct-to-consumer platforms. We're getting better at it. Things can be done, simpler products potentially, but when you're talking about a holistic financial plan, you need interaction. I don't see AI replacing agents. I see AI assisting agents. Having agents have better, deeper, more impactful conversations with their clients. AI picking up on things that maybe the agent wouldn't have known or didn't catch, right? So I think it's going to be a huge agent assist feature, but I don't think it replaces the agents. But at some level, we do need replacement of some agents because the universe is shrinking. So when I started in this business, there was over 500,000 agents, if not more. Now you're down to the 350, I think was quoted recently, 360. So we need something to replace all those agents that are gone. But I don't know that you would get rid of all the agents. I think through natural attrition of the industry and agent assist, you'll see AI play a role. But I don't believe AI will replace the traditional agent-client relationship.
First of all, there is this saying about almost any profession that it's not like AI will replace agents. Agents that use AI will replace the agents that don't use AI. But to talk a little bit more about this, think about travel agents and real estate brokers and like other agents that you have in other industries. AI replaces the simple tasks. Like if I need to fly from SF to Vegas, there's like 12 flights a day. I don't need a travel agent to help me book this. But if I have something way more complex, then I definitely need an agent because it's going to be super hard to do it on the app. So I think that's where you're going to have the same thing with insurance. If I want to have something very straightforward, very simple, instead of having today an agent and a form and a fact machine, I want to do it very quickly and very streamlined. But if I want to do a robust financial planning, I probably need some advices, or at least want to talk through some of my ideas and understand how to best package them. So you're going to have a combination of both.
This question is for Dror. Our group was recently in Bermuda for the Builder Conference for Life and Annuity, and to your point earlier, we do see a lot of involvement with the private equity and reinsurance companies. So you were talking about two different lapse or surrender scenarios. Was just curious as to where you're at in your maturity with a pilot to look at someone surrendering for economic reasons versus interest rate duration reasons. Thank you.
So first of all, I'm here after the session, so feel free to reach out. But to give a broader answer, I think the question was on specific use cases we have around the impact of interest rate on surrender behavior and lapse behavior. I think there are two things that the AI help us uncover. One thing is that we all assume it's the interest rate, but interest rate only explain about a third of the problem. There is another 2/3, which would be the agent and the customer. It might be, put it this way, if it was the interest rate, you would have 100% of the people hitting that category surrendering, and that's not what happened. So that's one thing. And then the second thing is that companies assume it happens around the point where the policy matures, the surrender window or the conversion of the term or whatever. It's also not the case. It can happen in any point in time. It really depends if this is driven by the agent, if this is driven by the customer, is this driven just by the rates? By the way, if it's driven by the rates, it's the easiest one to solve. Here's a new policy with a new rate. If it's not, then you go into all of these other questions. What does that mean from a policy perspective, an agent perspective, and so on and so forth?
Yeah, we're also looking at our block, and what we're seeing is incorrect usage of the riders they might have put on it, right? So a lot of our lapses are caused by people using their life income benefit rider correctly. They'll pay for the option, they won't turn it on, and they'll look at the interest rate and see what they're accumulating in their pack, and they won't turn on where the real value is in their income rider. So combination of agent action, rate plays into it, but into it because of features on the product that might not be leveraged. So it goes deeper than just the rate. The rate is triggering them to see, incorrectly or correctly sometimes, see something on the policy that would make the lapse, right? So we've been studying it for 6 months now in our block of business. So it's turning up a lot more interesting things in the block.
All right, so in wrapping up, I wanted to ask you two, and I'll provide some insight too, about just giving some general insight back, right? We are at a very pivotal time right now with Gen AI and even AI being at the brink of something that's going to be a very big change for us, right? And so what is some advice or what is some insight you would give to the audience as parting words? And I'll start. And this is kind of related to the first question that was raised, which was, I think there's a sentiment out there of being fearful of AI. And maybe this is my actuarial hat speaking. I think some of the jobs in the market are afraid of this. But I think the way to look at it really is that AI is not there to replace anyone's job, right? It's there to enhance it. And Dror touched on this earlier. It's, we no longer have to do the entry-level work that's taken care of for us. And so we have the space to grow into more strategic and more efficient work that we can assume. So I would just, encourage all of us to, embrace AI and really understand how we could use it so that it can relieve us and do other things that return back to society in a much quicker and much efficient and strategic way.
I think that insurance companies, at least in the history, the origination of this whole profession was around how do I better understand the data and how do I use this to have more signal, more information, therefore make smarter decisions. I'm sure when they invented, the the abacus, the spreadsheet. Everybody was afraid of like introducing the spreadsheet and what will we do with our, people that know how to calculate formulas. But we got past that. AI is just the next iteration of the tools. It's a better tool for certain things. It's not applicable for some other things. And the better question is, now I have a very strong tool in my toolbox. What is the right challenge to throw this tool on? And how do I best use this tool in order to solve the problem I have? And I think if insurance companies want to kind of maintain this advantage, they have to be in the front lines of technology too, because that's what has been with insurance companies for years, leveraging this technological advantage to be able to better underwrite, better make decisions, better manage the risk, and so on and so forth.
I think, by the way, when the mic goes in and out and people leave, that's them telling you to stop. So I think everything's been said, right? So I think embracing data, understanding why it's important, and we're doing so much more, and we're hiring more people. Like I haven't seen a reduction in my team. The data unlocks more thoughtful tasks to do. There's no shortage of work. There's no shortage of interactions with your clients. There's no shortage of interaction with product design. We're moving faster than we've ever moved before. So I think data is just going to enable us to do what we need to do in the next generation. And AI is going to enable us to do what we need to do in the next generation. There's too much to do in creating the news versus reporting the news, right? And I think the AI space just gives us the tools we need to keep up the pace we're at.
All right, well, thank you everyone for joining us. Please help me thank Nick and Dror.